We're usually living on this channel for educational purposes only. It is not intended as financial advice. It is Macro Monday. Let's take a look at BTC first. And today we had the classic problem with alts. Alts were not up 2x BTC. BTC was up 5. Alts were not up 10. Most alts were up less than 5. So it doesn't make sense to be allocating to alts right now, in my opinion, if the setups aren't there, if the trend isn't there, if you're not getting paid to take the risk. It just doesn't make sense. So for BTC here, we're still trying to figure it out. We're trying to get some sort of bullish reversal consolidation thing on IBIT here. Maybe it's an inverted head and shoulders. Maybe it's not. It's, I think, too early for me to be super convinced and throw money at this. I thought about it today, but it just doesn't feel like a short-term trade here. It feels like there's going to be some floundering and some meandering and some perambulating before we just zoom higher. War is inflationary. Hard assets should go up with inflation. More inflation means less cutting if the Fed is objective. If the Fed is not objective and they're cutting and we have inflation, then we probably go significantly higher on crypto. So that remains to be seen. But trade-wise, I don't really see anything here. Maybe on IGV you could justify an inverted head and shoulders better. But again, I think it's a little early. I don't think you quite have your right shoulder yet. I think it's worth a watch list. It's worth considering a trade. And I just mentioned the two because they've been tightly correlated. And of course, MSTR had a good day today. Not up 10%, but it was up more than BTC. And it's getting there. It's getting there. I would love for this thing, again, to just go sideways into April. I would love that. It'd be a great setup, great trade, great risk reward, entry, exit, stop loss. I don't know, whatever, somewhere below the cloud, but we're getting there. We're getting there. You know, it looked good back here. For those of you who remember, it looked good, at least to me, it looked good back here, and then it's built lower. It might look great again here for a little while and then go lower. Till it's in the cloud, that's when I like a trade to the long side. For data this week, it is employment week. We have ADP on Wednesday and then the unrate on Friday. If the unrate is down or flat and inflation is up, that is a recipe for no cuts. We don't have any cuts priced in until July, which would be post-Powell. And that's probably when we're going to get the cuts anyway. I can't imagine Powell's going to come at the podium in a couple of weeks and say, you know, things look great for more cuts soon. He's just not going to say that. Trueflation is still pricing in some volatile stuff here. Not pricing in, but it's collecting the data and spitting out a number that is significantly less than 2%. So the forward-looking, aka real-time data relative to CPI, continues to be heading lower, staying lower. And that's what we want to see ahead of inflationary pressures on oil. If we look at the Fed estimation of CPI, PCE, this continues to come down. We're only 2 days into March, so I will pretend these numbers don't exist for today. But these numbers continue to head in the right direction. Trueflation is headed in the right direction. The problem is, of course, the war in the Middle East. With oil, you know, this is the macro doomer Super Bowl, right? War in the Middle East, Strait of Hormuz getting shut down, oil to 100, right? You know, this is what everybody wishes for, dreams about on the doomer side. Gas still significantly cheaper than it has been for several years at this point. But if you had to take a guess, you know, if we see escalations in the Middle East, gas will go higher, oil will go higher. There's going to be less supply. If demand is equal, prices should go up. And prices will just go up because people expect prices to go up and they'll be speculating on prices going up. For the most part, the inflation basket has enjoyed energy being cheap or falling. And if that is not the case here, inflation is going to have a heck of a time staying around 2.5% or lower. GDP looks fine. Nothing here that says recession whatsoever. You know, next slide, right? There's nothing else to say. It's at 3%. The SPY, the Qs, all this stuff. I don't see a trade here. There isn't going to be a trade every day. There isn't going to be a trade every week, every month. You know, sometimes you just got to play the hand that you're dealt. Doesn't make for an exciting video if we're just doing nothing for months and months and months, but that's just where we are. I don't see a reason to buy the SPY here at all. There's other sector charts that look better to me based on trend, based on breakout, but absolutely nothing for me here. If we look at the sector ETFs, just across the board, there is some strength, some leadership, and some weakness here, so we'll talk about that. Two of the best looking charts to me still are XLU and XLV. XLU is a post-breakout cup and handle. Utilities should be boring, AI build-out related, but in a vacuum, this chart looks phenomenal. If you look at U, similar cup and handle at 27 should do well. Anything energy is doing decently well, has done decently well. You don't want this making any lower lows, but it had a good day today. Definitely. I think this is where you have to focus. You have to focus on trend or setups or chart patterns, anything, because the broad indices aren't going to get you there right now. XLV also looks very, very good. Pre-breakout, huge cup and handle. Ascending triangle here certainly looks like it wants to go higher. Definitely one of the better looking charts out there. And again, oppose this to like LabU or anything that looks similar. It's less about what this is. What it is helps put it into context as to what's going on in the market. But this looks like NVIDIA or SMH before it tried to break down. Looks like it wants to roll over. Does not look like continuation, not yet. Would need a higher high. It's alert worthy if it can make a higher high because it's consolidated for so long. But this is not a chart where I would jump into anything. You have a bearish TK cross there. Price teasing a move into the cloud. You are post-trend, right? This is where, again, people get themselves into trouble. They see this in like January, February, and like, oh man, it's moved so much. It's got to keep going. And they're late. The key is to watch this stuff and track it as the breakout happens. XLRE, which is real estate, looks good. Doesn't look too late. Definitely post-breakout, but it looks like it has plenty of room above the cloud. High time frame. And if you had to rank these sectors, either active trend, entry, bearish, or bullish, right? These would all be bullish. XLB a little late. You know, clearly you missed the breakout at 46 if you're getting in at 53, but this is still probably a high and tight flag. Still has a little bit of room to run. I'd imagine trend looks great. The better entries at the Kijun, the red line there, but even still looks fine. XLC kind of just meandering here, not really seeing much of anything. So this would be in the neutral part of the setups list. XLE also kind of late. It just feels late. Now, if you zoom way out and you compare this to like gold, you'd think XLE is going to like 2000. Sure, possible. But you know, charts that are this far out of the breakout to me are almost just as bad as bearish charts because I missed it. There's nothing to do. I love us on a pullback. I love us on a consolidation, but it looks a little tired up here. XLI is another one. Industrials, similar to materials. Active trend looks fine. Just looks a little bit late. Do I hate entries here? Not really. But is it the ideal entry? No. Is it the optimal entry? No. So I think XLU, XLV still winners there. XLP, consumer staples, also way late, right? Way late on entry. I'd wait for pullback on that one. Now we get to the bearish side of the equation. Financials, XLF. Never got your continuation, just rolled over. On the daily, XLY, just consumer discretionary rolling over. These are not good signs for risk assets. If you look at the Qs, similar, just neutral, but I don't see anything here. Maybe you could argue a low time frame inverted head and shoulders there, but this does not look like bullish continuation at all to me. XLK, same deal. Technology, similar to IGV, rolling over. 404, bullishness not found. And then if we get into some other military industrial complex type stuff, XAR, aerospace and defense ETF, looks okay. I don't love it. If I'm going to root for something, it's going to be something that's pre-breakout, but above the cloud. This just kind of, I don't know, like looks like mush. Doesn't really look like anything. It's bullish, definitely bullish. There's also ITA. It's probably a new all-time high today. Low cup and handle action at the top there. Of the two, I like ITA better. Some individual names. Kratos, however you say that. Maybe a cup and handle. Doesn't look like an entry here. To me, RTX, Raytheon, just continues to pump higher. Trend-wise, it has done very, very well. That's probably maybe a new all-time high. I don't know. I'd have to zoom way out on that. But Cloud loves this because it's just a slow trend. Reconsolidation up, reconsolidation up, reconsolidation up, reconsolidation up. Just over and over and over again. So this does look very good. Is it a great entry, an ideal entry? Not really, but it is a way to buy high and sell higher. Now, if I had to contrast this with like Lockheed Martin, again, you're way late in my opinion on this, just based on the technicals. I'd rather trade XLV, XLU than this, even UU than this. This is just a little late for me. Or Nukes. Nukes continues to look like, to me, one of the best charts out there in ETF land. Multi-month consolidation. It's got narrative on its side, chart pattern above the cloud, etc., etc. New all-time high soon. looks very, very good for bullish continuation. Got an alert on this today, which is the insurance, US insurance ETF. This is a gigantic ascending triangle, also above the cloud. A long idea. That's not super exciting, right? Insurance, but at a time like this, in the track record I've had this year, it certainly looks like a place to be thinking about the non-super high flying stuff. And then lastly, SMCI, which would be in the high beta category, also looks like it's still setting up for a move here from 33 to 43. So the defensive stuff keeps winning, not military defensive, just market defensive. XLU, XLV, these are not classically risk on things. Bonds to me still look good. They had a bad day today. Zoom I cut half of. IREN I cut half of today. Miners collectively look okay. Again, there's like nothing to do because they consolidated. They tried to break out. Trend failed. Okay. Now what? Nothing. There's not always going to be something to do after every single question answer. It's still building a consolidation there. I'll talk more about the portfolio tomorrow. That's all I got for this one. If you like, dislike, comment, share, subscribe, and happy trading.